Now it's being recorded. Okay. So invoices are paid on a cost reimbursement basis, meaning the agency will make the purchase and then invoice the county for those costs the following month. We will then process those invoices and pay the agency. Invoices are due on the 15th of each month following services. If there is a conflict with the schedule, please reach out to your program contact and we may be able to work something out. However, please note that our calendar year end, which is the December invoice that is due in January, and our state fiscal year end, which is the June invoice due in July, will have very tight schedules where we will not be able to accommodate altered deadlines for invoice submissions. We will email reminders of those two deadlines with vital information closer to those dates, so you will have all the information you need. When you submit your agency's invoice, that goes directly to your program contact. Program coordinators will review the invoice for program eligibility and allowability, and also confirm that the necessary backup documentation is included. We will cover what backup is required later in this training. After the program coordinator approves the invoice, it is sent to our finance team to review for verification of costs, amounts, and fiscal documents. After invoices are submitted complete and accurate, the invoice will be paid out in 30 days. When I say complete and accurate, we mean that there are no errors that need to be fixed, such as missing backup, clarification on expenses, errors on the claims, claim vouchers, and etc. The link at the bottom of this page will take you to Clark County's general terms and conditions for detailed information. This next section will cover the different components of the invoice packet that are to be submitted to the county for reimbursement. These four components are what makes up the invoice packet you submit. First is a claim voucher, then the payment request form. You'll see us refer to this as the PRF, then the general ledger, and finally the required backup documentation. I also want to note that this is the order we would like you to submit your invoice in. Typically, all of these components can be submitted in one PDF document. However, sometimes some programs have very large backup files, so those can be submitted as their own bundle. Let's dive on in and go over each of these. On the right of the screen is an example of a claim voucher, or commonly referred to as a CV, that is used for your invoices. The county will send you blank CVs with unique CV numbers. If you run out of CVs at any point, please email your county contact and we can send you more. The CV number is located on the top right of the page. It is extremely important to keep track of the CV number and make sure that you have not used that specific CV number before. If we receive a CV number that has previously been submitted, we will need to bounce it back to you and request a new CV with a new CV number because our system will not allow us to enter a previously used CV number. That will require you to fill out and sign a new CV and send it back to us, which will delay the invoicing process. The CV needs to be completely filled out with the following: the contract number located on the top left. Be sure that this is accurate so we can identify which program is being invoiced. For example, this would be where you put 2025-CHD-01. The billing period is where you input the month that is being billed. The provider name and address section will be where you put your agency's name and your agency's address. The date line at the top is where you will put the date of when you are submitting your invoice. The description of services provided box is where you will break down the totals of each category. Categories meaning operations, rent, facility support, admin. And finally, each claim voucher will need to be signed and dated under the provider certification section. This is where you can electronically sign or physically sign and scan the CV. Please note, as mentioned before, if any of the components on the claim voucher are incomplete or have any errors, or if the claim voucher number has previously been used, we will be bouncing it back to you for corrections and resubmission. So moving on to the payment request form, also known as the PRF. This form is provided by the county and matches your contract budget. It is an Excel document and is formulated to keep track of your overall fund spending. We will see an example of it on the next slide. The PRF has a section for budget change requests, also known as unilateral budget modifications, or commonly referred to as UBMs. We will cover more about this later in the training. When filling out the PRF, make sure that you are using the correct designated row for that specific month you are invoicing. Also, please make sure that the totals on the PRF match the totals on the claim voucher and general ledger that you submit. If they don't, it will delay the invoice process since we will need to figure out the issue. Sometimes we will not be able to figure it out, and then we will need to reach out to you for clarification. The PRF does not need to be signed, but at the bottom of the PRF, there will be two lines, one for the name of the person who is filling out the PRF, and the other for their contact information. This is in case we have clarifying questions and we need to know who to reach out to get those answers. All right, here is an example of what the PRF will look like. As you can see, there's a section for the name of the agency, contract number, and program name. This will be filled out by us and will help you ensure that you are using the correct PRF for your invoice. There are several columns on the PRF. One indicates the month you are invoicing. Next to it is the CV number. This is where you will input the corresponding CV number that you are using for your invoice. Then we get to the different categories such as rent, assistance, other rent, which both of these are now combined together. Then we move to operations categories, and finally the admin. And some of you might have facility support as a category. As you can see, there are multiple columns of the same category. Each one has a different funding source like CHG, House Bill, CHG, CHF, and so on. Depending on the funding in your contract, you will see these distinctions. It is important to note that we require you to use state funds, which is CHG, or other state funds, before moving on to local funds, such as House Bill. If you take a look at the bottom left corner of the table, you will see an asterisk that signifies which funding source you will need to spend out first. On this example, this agency will need to spend out CHG and CHG CHF first before moving on to their House Bill funding. The budget authority row shows the breakdown of the contract budget. It shows how much of the funding goes into each category. Then at the bottom, the adjusted line ITD shows how much of the budget has been spent within that category. And underneath that, the adjusted balance remaining will show how much of the budget in that category is remaining. We will go into more detail about the budget change request section later on in this training. The gray cells on the right side are formulated and will help everyone keep track of the budget in the contract. The invoice total will show the total amount that is being invoiced for that specific month. The ITD column will show the total amount that has been spent in the contract, which includes the current month and the previous month expenditures. The budget balance remaining will show how much is left in the budget after subtracting what has been invoiced. And finally, the admin spending will show what percentage of the month's total is admin. Please make sure that the admin percentage is equal to the designated amount. I believe that has gone up to 15% for all contracts. All right. The general ledger is typically provided by your accounting software. We are requiring agencies to submit both a PDF version of your general ledger that goes with your invoice packet and an Excel version as a separate file when submitting your invoices. The PDF version is reviewed by program staff, where we look for general allowability of those costs and make sure that they adhere to the contract. The Excel version is reviewed by our finance staff. We require an Excel version because the finance staff will have to go through each line item on your general ledger to confirm the costs and make sure everything adds up. Having an Excel version of your GL tremendously speeds up the process and will get you paid out faster. Your general ledger must have the following: vendor name, description of the cost where you clearly identify the service that is being invoiced, dates of service where the date should be accurate and not generic or just within the month of the building. This date should be when the cost was actually incurred and should match the backup documentation. It will also include the amount of the service or item and two things to know about administrative costs. Contracts with local and state funds require a cost allocation plan and must be reviewed and approved by county finance staff. Also, agencies receiving federal funds who have a federally negotiated indirect cost rate and cost allocation plan must submit their information to county finance staff. On to when to bill costs. All costs should be billed for on the month that they are incurred. For example, all July costs should be billed on the July invoice. We do have some flexibility if an agency has a cost that needs to be billed late. Whether the agency received a bill late or wants to reimburse the cost on the following invoice, or if the agency accidentally left out a cost and would like to reimburse for it, we just ask you to please reach out to your county contact prior to billing that late cost. This way, we can all be on the same page about that cost. When billing a late payment, we ask you to mark it on the GL as LB for late billing. This way, we know that this cost is being billed late and can verify that this cost has not previously been billed during a prior month. This is also why it is important to have the correct date of the service or item on the GL. You can mark it as LB within your accounting software or on Adobe by adding LB as text next to the cost. You can also write it in and scan it your GL and provide that. However, there is an exception to late billing revolving around deadlines for calendar year end, which is December 30th, and state year end, June 30th. We are unable to accommodate late billing during these two deadlines. We will send out reminders prior to those deadlines with information about which contracts are affected by these deadlines, as the funding source of the contract will dictate that. And it is important to note that expenses must be billed in the fiscal year that goods are received or services are rendered, not when they are paid. What if an ongoing cost crosses months? For example, what if a service started in mid-May and went through to mid-June? You would bill that service on the June invoice with other June expenses. For services, an agency cannot exceed 12 months of billings per year. If costs must be billed late, provide your county program coordinator any additional details as to why and when you are submitting that on the invoice. Backup documentation is not required. Oh, sorry. Move on to the next slide. Any questions so far?
Mel has a question. Go ahead, Mel.
Hello, good morning. Um, I think you touched on it a little bit, Luis, but as we're entering this new period of performance, when we are coming across bills that have arrears or charges from other months, if we receive bills for arrears for client expenses that fall in a prior contract period of performance, are we able to bill those to the new contracts or in the new calendar year?
I believe so. We are able to accommodate for that. Those are separate. Arrears is a different category as billing goes. We'll cover more of
Okay.
that in a different section of the presentation. But
Okay.
thank you for that question. Yeah.
And Mel, this is Alyssa Page. Just to kind of
I-
clarify, it just depends on the type of expense. If it's a client arrears expense or
Mhm.
if it's a provider arrears expense. So if it's one of your operational expenses that you
Mhm.
forgot to bill or it's outside the budget period, we cannot include those in the new budget period. All of the provider operational direct expenses have
Mhm.
to occur within the contract or budget period to be allowable for
Sure.
reimbursement.
And would it make a difference? And thank you for that. And if it's a client expense, would it make a difference if it was like our fault that it was late billed, or if it's the client's fault or like the landlord's fault?
No, I don't believe the reason makes a difference because
Okay.
when you agree to make a payment for a participant, it's not your provider direct expense. You're taking on the responsibility when you are making the payment for them. And so that's why when it's a client payment and not your direct expense is why it's different and why it's allowable.
Got you. Thank you.
Mhm.
Any other questions before we move on?
There's nothing in the chat, so you're good whenever, Luis.
Cool. Yeah, let's go on to the next slide. Okay, this next section, we're going to cover backup documentation, when to do it, when not to. So you can move to the next slide, please. So here are some examples of when backup documentation is not required if there is sufficient detail in the general ledger. For staff time and benefits, the name, ID, or position is included on the GL line description. The amount of the salary or benefit is provided, and the dates that the employee worked are included. Please note that the staff time must be billed in the month that those hours were worked and not when they were paid. So hours worked in July will need to be billed on the July invoice. For ongoing program operations such as building rent, utilities, office phone, etc., the GL line should include the vendor name, description of the cost that clearly notes what the service is, dates of service, and the amount for that cost. Cell phones require the staff name, position, or phone number, the vendor name, description of the cost, dates of that service, and the amount for that cost. Client rent, utilities, housing deposits, or application fees will need the vendor name, HMIS number, description of that cost, dates of service, and the amount of that cost. Refunds and credits will need a description of that cost that also include the original date that cost was charged. Some important notes for refunds and credits. These need to be credited to the same funding source that they were originally charged, meaning if a charge was invoiced under an operation cost, it will need to be credited back to the same operation category. Additionally, a brief description as to why or what and why the refund is occurring should be provided to program coordinators when submitting the invoice. If the credit is from a previous contract period, reach out to county program staff for instructions on how to process that credit. Although these examples do not require backup if enough detail is provided on the GL, It is important to note that agencies will need to keep proof of costs on file for a minimum of 6 years after the end of the contract's fiscal year in case of auditing. Right, expenses that do require backup include online purchases like Amazon expenses. Online purchases cannot be billed until they are received. The backup provided needs to include the received date, which means when you have that item in hand. Backup for Amazon purchases need to clearly indicate that the items were either shipped or delivered on the receipt. Expenses such as general store purchases, client services including flexible funds and essential need purchases, client debt collection payments, client hotel motel stays that are prepaid, all must include itemized receipts that are legible. Those receipts must show the vendor name, date of the transaction, and the amount of the purchase. Credit card statements cannot be used in lieu of an itemized receipt.
I also want to do a specific call out on this one around when you're planning for fiscal or calendar year end billings. When you're buying in bulk essential needs for distribution, and that includes bus passes, essential needs, supplies for handing out for outreach, anything like that, you absolutely need to have them fully dispersed before that final billing is due. We cannot buy in bulk, say in June, 100 bus passes and only distribute 10 to 20 of them and be able to reimburse for the full amount regardless of your contract. So we need you guys to do some careful planning around those fiscal calendar and year-end deadlines to make sure that everything is fully distributed and your next purchase doesn't need to be paid or made until that next period for the fiscal year following.
And to add to what Kayla said, this is Alyssa again, and the reason for this is because Commerce and county have different requirements when it comes to when you can bill costs. With Commerce, with the state, it's when you pay for them, but county policy is when they're distributed. So we have to tie both of those into when we can reimburse. So the purchase and the distribution has to be within the budget or contract period for reimbursement.
Cool. So backup documentation is required for staff travel and training expenses, and they must follow the state of Washington Office of Financial Management travel regulations. Local travel within a 50-mile radius of work location must include backup that consists of a log that includes dates, location, number of miles, mileage rate, program, and a description that clearly identifies the reason for the travel, and also manager approval. The mileage reimbursement rate is the current IRS mileage rate. It is currently at 70 cents a mile. We will update everyone when that changes. For non-local travel and trainings, these must be pre-approved by county staff. Staff training costs cannot be billed to the county until the training takes place and require itemized receipts for travel costs that are over $50. Meals and lodging are reimbursed based on the State of Washington Office of Financial Management per diem rates. Any lodging expense that is beyond the allowable per diem rate, including taxes and fees, will be the responsibility of the provider. The URL on the page will show the allowable per diem rates. All trainings require an agenda or a certificate of completion for the required backup documentation. If a staff member pays out of pocket for these costs and is seeking reimbursement, then they must meet the following. The costs must be business related, allowable per the contract, and approved by management. The reimbursement request must include the date, vendor, amount, program, and a description of that cost. An itemized receipt is also required to be submitted as backup. These costs can be on the same form as the mileage reimbursement requests. If an agency does not have a log or reimbursement form, the county can provide those. Gift cards of any kind are not allowable expenses through your Clark County contracts. The reason being is that they are extremely high audit risks and can be transferred for cash. They would also require additional documentation and in some cases can be used to purchase items that are not approved as allowable costs. Laundry cards, bus passes, and gas vouchers may be allowed as essential needs items if those passes cannot be exchanged for cash or no other option to pay for that service is available. And they require itemized invoices and tracking logs when submitting them for reimbursement on your invoice. No gift cards are allowed through the TBRA programs. Laundry, bus, and gas assistant is not housing focused case management and not eligible under TBRA. Renter's insurance must be required in the lease and documented as a lease requirement on your GL in order for the county to reimburse you for it. These costs need to be billed monthly and not as a lump sum. So if an agency has to pay for a policy for a client that is for multiple months, it will need to be broken down into monthly payments. And it is the responsibility of the agency to ensure that this gets invoiced monthly. The reason for us not being able to pay for the lump sum is that we are unable to pay for costs once the tenant leaves the program. And there is no guarantee that the tenant will be in the program the full length of the coverage. The guidance comes directly from the state auditor's office. In TBRA programs, renter's insurance is only allowed under CDBG funding. For hotel or motel billing, the following is required. If you are paying in advance, a folio must be included and amounts paid must be clearly identified. Check-in and check-out dates must be clear to reconcile the amounts being billed on the general ledger. Be consistent with check-in and check-out dates on the GL description. For example, a hotel stay for one night in July would read 7/15 through 7/16. These costs include the per night rate and any applicable taxes and fees, but cannot include room service, alcohol, tobacco, or any other non-essential cost. Please note, if a client's stay crosses months, only bill the amount for the month of the invoice and split the remaining amount for the following month's invoice. If you are paying after the stay, the GL must include the dates of the stay, the HMIS number of the client, and the total payment with taxes and fees included. This is not an allowable expense under TBRA. Here is an example of a hotel folio. As you can see, the HMIS number is provided instead of the client's personal information. Personal information should be redacted and not just painted over. Amounts billed are clearly shown and should match the GL. It is important to note that you are not able to bill based on prepaid amounts, but instead bill what is actually charged based on the folio.
I also want to add on this slide, if you are billing for a folio and you make multiple payments or you're splitting the costs, please clearly identify for us the costs and the date ranges that you are billing for this GL, either just on a note on your backup or very clearly on your GL. That way that way it's easier for finance to confirm what the actual date range and expenses are that are being included.
And then we can go to the next slide. Any questions over this section?
Nothing in the chat.
Not seeing anything either. Okay, we can go ahead and go on. Some helpful hints to make the invoicing process run smoothly. Okay, so here are some helpful tips to make your county staff happy and to make the invoicing process run smoothly and perfect. So any personal identification information should be removed or redacted from the document. In place of the client information, such as names or initials, should be replaced with HMIS numbers. If client PII is included, program coordinators will bounce the documentation back and request resubmission with those redacted. Backup should be submitted as a single PDF document and should follow the same order as the expenses are shown in the general ledger. If backup is not in order, the program coordinator may bounce back the invoice and ask for resubmission with the expenses lining up to the GL. Also, a reminder to bill grant dollars before you bill local dollars. Remember to keep an eye out on the PRF for the funding sources that include an asterisk, as those funding sources will be the first you need to bill out. If an invoice is being paid by multiple funding sources, please make sure to include the breakout of how it's getting paid on the claim voucher. Ensure all program codes match between the GL and the backup. Program codes could be a numbering system for your accounting software or the program name. And all costs on the GL should match the costs on the backup. All right, this first one is important. So when in doubt, ask in advance, not for forgiveness. You can always reach out to your program contact and ask questions when needed. For costs that are not explicitly called out in your contract and you submit a formal request for approval, more on this later in the training, you will need to submit the email approval from your county contact as part of the backup documentation for that expense. If there are any changes that are made to your PRF, your county contact will reach out with an updated PRF and clarification on the change. Please make sure that you are updating your PRF with those changes so that the following months include an accurate PRF. And lastly, do not include any backup that is not necessary. So there are several different ways to submit an invoice. Options include email, Cerberus, Teams, and OneDrive. Email is the easiest method, but it's the most unsecure option. If your invoice files are too large for email, that is where Cerberus comes into play. It is an online platform where you can upload your documents and we can download them for a review. To use this option, reach out to your county contact and we can set up a monthly link and a password for you to access it and upload your documents. Any questions for this section?
Go ahead, Chris.
Hey, so I had a question about itemized receipts tying to the ledger. So We've historically had some issues with like hotel stays and us using like third-party sites like hotels.com or something, and like a secret fee popping up that we don't actually have a receipt for, but that fee then shows up on the credit card charge. We've stopped using third-party sites for hotel like stays because of that problem. But that one area that we cannot get around is app fees. That a lot of vendors will say like, "Hey, that fee is $45." They'll give you what their like statement is for their site, but when they actually go to process it, there is a fee tied to that charge, and there is no receipt for that fee. And so what we've been doing is like, let's say that fee is $65, but then the credit card charge is whatever, $72. We've not been billing that extra $7, and I'm wondering if we can. I mean, backup's not required, but like in monitoring, right? If you looked at these, you'd see a receipt that doesn't tie to it. But can we bill the full amount and just in our own internal records have what the vendor gave us and then like a screenshot of the credit card statement just to prove that there was that extra fee? Does that make sense?
Yeah, Chris, this is Alyssa. I guess I'll jump in and take this one. Is there any point in the process when you're doing the online ordering before you make the payment where it breaks out, this is your cost and there will be a credit card charge amount, credit card processing fee amount, or of XXX?
It
It
does. That does not. I mean, yeah, that does not exist in some cases.
Okay, if there's no possible way to do like a print screen or anything, a snip from the website that breaks out the charges, yes, you can bill the full amount. Keep your credit card statement or any notes tied to it that on file in case of an audit or questions as to what made up that amount. But yes, the entire amount is allowable. You just need to make sure that you do keep enough backup that you would be able to explain or have the appropriate documentation to support the expense.
Beautiful. Thank you.
Mhm.
I'd also say include that on your backup too, either just handwritten note or typed note for program staff. That way, if there's a difference there, we can understand where that difference is coming from.
If that expense requires backup.
Yes.
Correct.
Okay.
Mel?
Hello, here with Cher again. I have a labor question. Um, so slash landlord incentive. So we typically pay contractors to do cleanup work around our group homes, and we typically bill them as landlord incentive. We also happen to have a different department in our organization that we have employees on payroll who are capable of doing that work internally. Would we be able to bill their time to do that cleanup work versus paying a contractor to do it as a landlord incentive?
What?
Let me jump in here just to add some extra context. So, like, these are clients where we have master leases. Typically, they've caused some damage at these properties, and so in order to keep the landlords happy, that's where it falls under landlord incentive. And the reason of the idea of using our internal department to do this work as opposed to a vendor is we can do it at a lower rate. And so it actually helps cut down on some of the landlord incentive costs.
Alyssa, again, I'm going to jump in here. If you have staff assigned to a specific program or location that are working on that program or location, that would be an operation or facility expense, depending on what type of location it is. So if they're doing cleanup, and I know you didn't use this as an example, but if you have maintenance staff or security staff or just regular staff that are doing cleanup at a shelter, that would be a facility support expense, but it would be an operational expense if that is part of their job duties at a different location that's not a facility. Did that answer your question or make it more confusing?
That helped. Now let's say that this staff's primary job is not tied to the program that they're doing work for. They're providing a service to help support this program, but that's not their primary program.
As long as they can direct bill their time to that program or program code that can be billed to the GL, it would be an operational cost. You would not be able to allocate their time out as an operational cost. It would have to be covered under your admin budget.
Okay.
And that brings up, is the next part Louise program? Because I wanted to add some more about Invoice before we went on to program stuff.
The next part is about the budgets.
Okay, I'll wait then.
There's no questions in the chat, Louise, so I think you're good.
Okay, next slide. So in this section, we'll be going over the difference between a budget modification and unilateral budget modifications. We will be also going over how you can request a UBM and show an example of what that looks like on your PRF. So there are two types of budget changes that can occur: a budget modification, or mod, and a unilateral budget modification, or known as a UBM. So a budget mod affects your overall contract amount, including increases and decreases to your total contract budget. These require a full modification with signatures from the county and agency officials. County staff will be monitoring budget spending and will reach out with any concerns around spending. UBMs are budget adjustments that move funds from one category to another and can be initiated by the agency on the PRF. Common occurrences for these are when a category runs out of funds and needs to be replenished from another category in order to cover those expenses. Another reason for a UBM would be if you are trying to spend out grant dollars before moving on to local dollars. Let's say you are spent out, let's say you spend out CHG dollars in the rent category, but still have to cover $3,000 of rent costs, and your CHG operations category has enough to cover the remaining rent balance before you have to move on to your rent house bill category. You would initiate a UBM to move those funds into the rent category to cover that remainder instead of charging local dollars. The PRF includes a section to account for these budget adjustments. I will show you an example in the next couple of slides. UBMs are to be filled out by the agency when submitting that month's invoice. So if you are requesting a UBM on the month of November, you would submit the PRF with a UBM when you submit your invoice packet for November. One last thing, instead of initiating a UBM that is only moving enough funds to cover a specific month's need, you should estimate how much budget needs to move to cover expenses through the end of the fiscal period. The less UBMs, the better. All right, so how to request a UBM. On the PRF, you will include the month and the CV number corresponding to when the adjustment is requested. You will also input the increase and decrease for the categories being adjusted. Please make sure that the total cell in the row for that UBM is equal to $0. Funds can only be moved between like funding, so CHG can only be moved between other CHG categories, house bill to house bill, and so on. Admin allocations are set and cannot be adjusted. Generally, operations costs can be moved into rent assistance, but rent assistance may not always be moved into operations. Make sure to reach out to your county staff to check on this. It is always best if you reach out to your county staff when you think you are going to need a UBM. That way we can all be on the same page. So this slide shows an example of the section of the PRF that accounts for the modifications or adjustments. As you can see, there are 2 UBMs and 1 mod on this invoice, on this PRF, sorry. As you can see, the first UBM shows that they're moving $10,000 into the rent assistance house bill category. They are taking out $1,000 from the other rent and taking out $9,000 from the operations to move that. And then at the end, it zeroes out in the budget balance remaining. For the modification, the second row, this is adding $20,000 to the total budget, 15 into rent and 5 into operations. The budget balance remaining shows that it's $20,000 being added to the total amount. Under the budget authority section, you will see the date and the CV number for the corresponding UBMs, and then mod 1 for the modification. And I think the next slide is for questions.
Alyssa, this would be a good time to pop in as well if you wanted to touch base on anything else.
I did. There's been just a few changes. I think the biggest one was the travel and training. So we tried to list that out in your contracts when you do get those to review them carefully in the payment sections. We're having to follow the state's travel guidelines and not the county's travel guidelines any longer. Also around facility support, if you have facility support budget in any of your CHG contracts, any expenses tied to employees working at the facility, like maintenance staff or security, any of their mileage or time would be a facility expense. But any case managers and any mileage, cell phones, anything tied to case managers, including their payroll, is an operations expense. And to make things even more complicated, if your office is within the facility, any of your office expenses, rent, phones, utilities would be a facility expense. If your office is outside of the facility, any of your office expenses would be an operational expense. And I think and refer back to your contract. We tried to spell it out as clearly as possible in the payment sections, but reach out if you have any questions about that at all. I've been confused about it for quite a while, but I think that we finally have it sorted out. And that's all that I wanted to add to highlight some of the additional changes this contract period.
Before we go into the program side of things, does anyone have questions, especially while Alyssa is still here with us regarding invoices and the finance side of things?
Case manager staff that have mileage that is tied to dropping off rent checks for clients, taking clients to appointments. If that's case manager mileage, that would be an operational cost. If it's facility staff like maintenance staff going to Home Depot to pick up items needed for the facility, that would be a facility cost. Anything tied to case managers is operations. Anything tied to staff working on the facility or at the facility itself, so not tied to any clients or doing any type of client work, would be a facility cost. Does that make it even a little more clear?
We don't have questions, so I assume you're Crystal.
Okay, well, I saw something pop up in the chat from Nikki, so I was trying to explain it a little better.
Leanne?
Okay, yeah, and so then now I will also have to differentiate on my wages and benefits, which staff is facilities and which staff is operations. I was doing that for a while and then I haven't had to do it. So now I have to do it again.
Correct. Any of
Okay.
your facility staff, that your maintenance staff or your security staff, all of their expenses tied to them, expense reports, purchases, anything they're doing would be tied as a facility expense.
Okay.
But anything tied to your case managers would be an operational expense.
Kiva?
You're on mute.
I guess I undid my camera and not my mic. Sorry about that. Hi, I was taking a look at the link y'all provided from Monday's training for mileage eligibility, and it doesn't give detailed mileage. We've just had a couple things sent back, so I wanted to clarify. Anything that case managers are doing related to clients are eligible, but if like a case manager needs to go somewhere for like office supplies and back, is that eligible as well, or?
If they're going to a location outside of their normal work address, like going from home to work or to a meeting at work, and they're working primarily from home, that's not eligible. But if they need to go to Target or Costco to pick up office supplies or any type of purchases that someone might need, yes, that is allowable from their primary work address to the location they're traveling to and back.
Perfect. And what about like a team meeting? So from one work location to another work location?
No, that would be part of just normal business activity, and that is not reimbursable.
Okay, thank you.
So normally I think the general rule is if it's a work address that they need to go to, it's most likely not going to be reimbursable. Anything outside of a work address, going to the post office, delivering checks, picking up food from a food bank, that would be all reimbursable.
Alyssa, do we have, or can we get a copy of that provided, infographic that have the pictures of like work location,
Yeah.
home, work, home to distribute?
And that's all off of the link that I sent. If you go in there and look at the travel facts and tips, there's a link that if you even search local mileage, it has an explanation off of the per diem rate tables link that I sent. All of that is available. If you can't find it, reach out, let us know. And I think I have a copy saved that I could email out to everyone or whoever needs it.
Perfect. And then Nikki asked if we have a specific mileage log that we would like her to use. Nikki, we don't have a specific like Clark County provided one, but we can provide you an example, like a blank template if you would like. But generally, as long as the information that we're asking for is included, you can use an agency provided mileage form. And then Luis, is there anything else you want to touch base on before we move into program stuff?
No, you're good to take it over.
Alrighty.
All right, thanks everyone. I'm going to jump off. Reach out if you have any additional questions.
Thanks, Alyssa.
Thank
Bye.
you, Alyssa.
Alrighty, we're just gonna go through some helpful information on the program side of things. Oh, I got one more question from Leanne, so running back really fast. Mileage for our maintenance staff from one location to the other would be excluded. Leanne, your situation for Catholic may look a little bit different. I think that we would allow that mileage because you flex those staffs between the shelter locations instead of hiring an individual staff person for each individual location. So it's more cost effective to provide mileage that way. We can clarify with Alyssa offline since she just hopped out. But I believe that we gave that allowability for your mileage staff to claim that.
Okay, great. That's really helpful. Thank you.
So arrears and past debts. So you need to make sure that is allowable in your county contracts. Most rent assistance contracts will allow for arrear repayments, but shelter contracts may not. They only allow for move-in costs. So if you are working with a shelter client and they have arrears, you would need to connect or utilize an alternative funding source or make sure they're connected with a program that can assist in those arrears and debt repayments. Um, the arrears, when they're paid to a current landlord, are considered rent, except for TBRA. Any arrears need to be billed to CDBG. When paying arrears to a previous landlord, the payment has to allow the household to obtain permanent housing verified in writing by a third party. And the costs are limited to housing related expenses. So we will not pay anything in collections that is not specific to that household's rental history and experience with the prior landlord. Backup documentation should be included that itemizes all charges that are owed, and then include that cost as rent, except for TBRA, where you need to bill it to CDBG. If past debt is not housing related or not itemized, it shouldn't say is not housing related. If the past debt is not itemized, then the payment must allow household to obtain permanent housing verified as well. It should be billed as flex funds. And it's not allowed under TBRA. Well, we can talk through that a little bit more. Depending on your specific circumstances, if you're working with someone who is in collections right now, and depending on what documentation you can actually get from the collections agency, whether or not it's itemized, or the information if you're in connection with that previous landlord, we may tell you it's flex funds or we may tell you it's an allowable rent cost, but you can just reach out to us with your specific circumstances if it's not clear, and we can provide you more guidance. For any costs that are not identified in the contract, you need to request permission for billing before you accrue the costs. So reach out to your county staff. On the next slide, we're going to give you a list of the things that we will ask you to provide for us. If you do not approve a cost in advance, we will not allow that cost to get through. We will not reimburse for that expense. So it's really important to review your contracts and your allowable expense categories specifically between us, the county, and your agency. If something is identified in the Commerce CHG guidelines as allowable, but it's not explicitly called out in your contract, there is a reason for that. And so if you bill an expense based on the CHG guidelines or your other guidelines outside of your contract, and it's not in there, it may not get reimbursed. So it's always better to ask before you accrue the costs. Make sure that the email approval is included with backup documentation. This is something that we time and time again have to reach out to agencies for that delay the invoice process. So if you received an email approval from us, whether or not that is a one-time approval for the remaining life of your contract, something like if you've gotten a storage allowability cost from us, or if it is a one-time like flex fund allowance, both those email chains need to be included with the backup documentation submitted for that costs. Costs need to be tied directly to housing stability, or they cannot be approved. So we did outline some more clear parameters, and in the program training and in your contracts, and the state has also gone in and defined stability a little bit more for us in the new guidelines. So make sure your staff are really comfortable on what that means when we're looking at whether or not a cost is appropriately tied to housing stability. That way, when we're doing the request, we'll make sure that it's an appropriate request for the contract's purpose. And then if a cost is approved for one household, that doesn't mean it's a general allowance unless the county staff state otherwise for your specific program. So unless you've got the approval to have it, like that storage example earlier, that one-time approval, keep it on file, and keep including that backup documentation with all expenses. But if we have not explicitly told you that it is okay, this one-time approval to utilize that for the rest of your program contract length, then it is not a general allowance, and you need to request the okay from county staff ahead of time if that expense is to show up again in the future. And then for staff to make an informed decision, make sure that you give us the appropriate information to be able to accurately assess and approve the expense. And that information is going to be on this next slide. So we tried to dwindle this down a little bit for you guys because it was a bit extensive, but these are kind of the key components. And if any of this information is missing from your email or your request, we will bounce the request back to you and ask you to get this. So share this with your case managers or any program staff that may be needing to understand what is appropriate for flex fund requests and how to get that approval. That way everyone's really clear if they need to get any of this information specifically from their households. So we have what is the client's HMIS number, the specific program that the client is receiving assistance through, how the costs meets the goal of the client's housing stability plan, how this cost supports obtaining and maintaining permanent housing, what other resources were investigated and why they're not available. Does your agency have appropriate policies in place? Provide a copy of the PMPs, highlighting where that type of assistance is identified as a program support. And then if you're paying one time for an ongoing cost, how would the client pay future bills? And what other information is important to us to make an informed decision about this cost? A kind of a cheat code for this, if you don't want to do a bulleted list and send out all this information, if you send us a copy of your household's housing stability plan that's redacted and a copy of their rental subsidy determination, those two pieces of information should clearly kind of answer all these things for us already. So if staff is sitting down with a client, they're having a conversation, and it's something like, I just can't get to work. I need a tire repair and I don't have the funds for this. And it's in their housing stability plan, and staff kind of know how to prompt for these things. You have that diversion conversation. You identify if there's any other supports. Your staff are identifying if they've reached out to other agencies, other programs for any kind of assistance. That's all documented, and the only, step forward for us to be able to maintain that income component, which would directly tied to that housing stability piece, we can accept it in that format as well. So just some alternatives to if it seems tedious to kind of do it through a list version of a request, you can always submit your housing stability plans for us as well, for us to approve that cost. Okay, we're going to go over flex funds and versus essential needs. So contracts that allow for flex funds and essential needs programs or purchases, all flex funds need to be noted and tied to your housing stability plans. Again, this is going to look a lot more developed than historically now that we have the new guidelines around our expectations for housing stability plans. So not only to move away from just noting these, right? They need to have a clear tie, and there needs to have been a clear discussion with the client. The diversion conversation, everything needs to have taken place, and it's tied within that housing stability plan. And then there's a step for action. So we're no longer going to just accept, it's noted there, it exists there. We really need to see the work that's going around these flex fund requests and how it really is doing that impact. And then essential needs, they are available to all your households, and they don't have to be noted in HSPs. So, things like emergency clothing assistance, food assistance if you have to assist a household with obtaining groceries on occasion, outreach supplies, those things don't need to be noted in housing stability plans. Flexible funds do require itemized receipts with descriptions, and essential needs also require itemized receipts with descriptions. depending on your program type and if you're billing that on a one-on-one level or if you're billing it in bulk. So an example there would be for your outreach. If you have an outreach contract that has specifically been granted the allowability to bulk purchase, say like water bottles or food supplies, then we would just have that one itemized receipt, say from Amazon or Fred Meyer or wherever it is. We wouldn't have you track every single drop off with those supplies for people getting services through outreach. And then flex funds can be used to help your households increase income, pay for identification, obtain cell phone and service plans, occasionally storage fees during the housing search process. If they're not explicitly called out in your contract and you haven't been granted specific permission to bill those costs ongoing, reach out to Luis and I to get that approved or get that ongoing approval if you feel that you do need that in your programs. And then other costs as approved in advance by county program staff. Essential needs purchases. They can be used for personal health and hygiene, cleaning supplies, transportation assistance, client fuel expenses, costs for items necessary for life or safety, essential household furnishings, and laundry cards. Essential needs and flex funds in your contracts, you'll notice that they are grouped together under one funding bucket category, which is why it's really important for you guys to internally identify which falls into which bucket. And that's specifically because of the documentation requirements and standards for distribution. Those differences between flex funds and essential needs, regardless that they're in the same bucket when it comes to billing, they do require different things, and your program staff will monitor for that when we do invoices and when we do our actual program monitorings. And then this is not allowed for TBRA, so that is an important distinction as well. Does anyone have questions around program items? Okay, well, that is the end of our slide deck. If you don't have questions, be on the lookout for information from us regarding program training and this invoice training. We will send out the recordings to the homeless crisis response system together, so you have all the information consolidated. And if you're not a program within the homeless crisis response system, your program contact will send you this recording and any other information directly to your emails. Thank you, guys.
Thank you, everyone.
Thank you.